as long as they keep devaluing the dollar and increasing the national debt, Bitcoin will hit $1 million at some point. When central banks, when sovereign wealth funds, when Fidelity, BlackRock, JP Morgan, right, those types of organizations start showing up, they got a lot more money than you and I. And so having them show up is like having, the 200 people show up and try to buy the 4 plots of land. And so that's what kind of drives the price up. And then why would they show up to buy the plots of land or buy the Bitcoin? A huge reason is because historically they have stored value, right? Their economic value they've worked hard for in dollars. But now what we are seeing is that inflation is higher than it historically has been. And because we are raising the national debt so quickly, which is the money that America either creates, borrows, etc., the only way out is to inflate away the debt.
Anthony Pompliano begins by reaffirming his belief that Bitcoin will one day hit $1 million. However, he acknowledges that shifting market conditions and decreased volatility have extended the timeline. Bitcoin's volatility, a hallmark of its earlier years, has steadily declined as the asset matures and adoption grows. This drop in volatility suggests Bitcoin is stabilizing, making it increasingly attractive to institutional investors and long-term holders. Pompliano attributes Bitcoin's long-term price potential to its finite supply of 21 million coins. With a capped supply and increasing demand, especially from institutions, the price is naturally pushed upward. He compares Bitcoin to land, a limited resource that becomes more valuable as more people seek to acquire it. This analogy underscores the fundamental principle of supply and demand driving Bitcoin's long-term value.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Definitely not by 2026, but I 100% believe Bitcoin will hit $1 million one day. One of the things that has changed from 2021 to today is the volatility of Bitcoin has been dropping. And so if volatility is dropping as more people adopt the asset, it just extends the timeline. So, kind of the classic, you got to change your mind when you get new information, and seeing that volatility drop through the last bull market and through this last bear market has extended that timeline. It's really hard to predict timelines, but as long as they keep devaluing the dollar and increasing the national debt, Bitcoin will hit $1 million at some point. The second thing that I think is really important is we now have a lot of clarity that financial institutions are going to adopt this. ETF launches have happened since March of 21 to today. We see central banks, literally right now, the Central Bank of Argentina is mining Bitcoin in an art exhibit in their building. You can call it an art exhibit, but still a central bank is mining Bitcoin. And so we've seen other countries start to adopt it, et cetera. So like the biggest pools of capital are now starting to adopt Bitcoin, which means that there's still quite a bit of runway to go. And so $1 million is not hard to predict if it's given an infinite timeline, right? It's what is the timeline is the hardest part of making a prediction around price. There's only going to be 21 million ever in circulation. So it's a finite asset similar to that land. And so as more people show up and say, hey, I want Bitcoin, the price of the asset keeps going up. And so if it's just a bunch of individuals, as you, me, and a bunch of our friends showing up, okay, it goes up a little bit because there's some people who want it. But when central banks, when sovereign wealth funds, when Fidelity, BlackRock, JP Morgan, right, those types of organizations start showing up, they got a lot more money than you and I. And so having them show up is like having, the 200 people show up and try to buy the 4 plots of land. And so that's what kind of drives the price up. And then why would they show up to buy the plots of land or buy the Bitcoin? A huge reason is because historically they have stored value, right? Their economic value they've worked hard for in dollars. But now what we are seeing is that inflation is higher than it historically has been. And because we are raising the national debt so quickly, which is the money that America either creates, borrows, et cetera, the only way out is to inflate away the debt. And basically what that means is they're going to keep printing money, and they're going to, very similar to on your house, when you borrow a mortgage, it's a set price. So if you borrow $100,000 to buy a house that's worth, let's say $150,000, you put down $50,000, you borrowed $100,000. You just owe back $100,000 plus interest. But as the dollar gets devalued, you're paying back that mortgage with dollars in the future that are worth less. And so that's the arbitrage. That's how you create wealth in real estate. That's why people have so much of their net worth tied up in their home, is because they have a hard asset and the dollar is devaluing against it. Same thing with the national debt. The national debt is a nominal number, but they devalue the dollar in order to pay back, right, or to kind of inflate away that debt. And so if you're holding dollars, you're on the losing end. And so that's why you see so many good investors getting into real estate, stocks, Bitcoin, commodities, et cetera. They want to get out of the dollar. So it's kind of one of the paradoxes of the world, right? Is everyone wants money, but the wealthy actually understand it is economic value that you want, not the currency. The currency actually is guaranteed to lose value. And so in a weird way, again, a paradox of your life is that the thing you've been taught is safe, cash, sophisticated people know is actually one of the riskiest things you can hold, because it's one of the only things in your portfolio that's guaranteed to lose value. And so you've got to get out of dollars and get into these financial assets. That's why investors win and savers lose.
Saving in dollars, which your grandparents and great-grandparents said, erodes away that money. It's the class that gets squeezed, is the class that doesn't have the education. Saving in a sound money asset like Bitcoin and treating it as a modern savings account all of a sudden increased my purchasing power. That home became 99% cheaper. And so if you put it into dollar terms, if you had about $5,000 in 2016, you could buy the average home today in 2024. The rules had changed. You had to invert what you had previously been told. And so that is probably the most important part about Bitcoin. It was a good investment. I've had better. Hopefully I'll have many more that are better. But at the end of the day, what did I learn? You can apply inverting the rules and getting over on the other side of the table to be in that shareholder class, to own the assets, to benefit from inflation, not suffer from it.
Pompliano dismisses the idea that its success hinges on political factors. While political changes can introduce short-term volatility, Bitcoin's decentralized nature and global adoption ensure its long-term growth. He cites Bitcoin's ability to thrive under both Democratic and Republican administrations as evidence of its independence from political agendas. Pompliano notes that while some investors speculate on Bitcoin based on political outcomes, such as the potential impact of a Trump or Harris administration, these fluctuations are temporary. The overarching trend remains the same. Bitcoin's value continues to rise, driven by its intrinsic qualities and growing adoption, regardless of political landscapes.
Bitcoin is going to be successful regardless of who's in the White House. There can be some short-term impact, right? Obviously, if one administration is abrasive and the other embraces it, that can be a, kind of a difference for a year or two. But I think that if we look at the last 4 years, there's a lot of people in the industry that would argue that the current kind of Biden-Harris administration had been abrasive, right? The current regulatory environment, et cetera. I would counter that and say, even if you believe that, which I think is objectively people would say, Coinbase still went public. The Bitcoin ETF got approved. The Ether ETF got approved. ETF options got approved, right? So like there has been progress in the face of the abrasiveness. And so I think what people are excited about in a Trump administration, given what he has kind of positioned himself as, is like, imagine what would happen if he embraces it, right? Like imagine how good it would be. I think Harris recognizes, hey, this is a pretty big constituency. There's a lot of people here that own these assets. They've donated a lot of money. And so maybe I need to listen to the people. And so her camp is kind of saying, hey, let's reset relationships, right, with the industry. Regardless of whether you believe one of them, don't believe one of them or anything, I think what I find solace in is Bitcoin is going to be successful regardless of who is the president. Because it is not controlled by anyone, it's decentralized, it's global, it's backed by the strongest computer network in the world, it's got all these advantages to it. And so there can be short-term volatility, but over a long run, I don't think that people who are trying to buy or sell, the asset based on who the president is are going to be any better off than people who just say, hey, look, I'm going to evaluate Bitcoin for Bitcoin and not worry about the political stuff. I do believe that Bitcoin right now is trading kind of neck and neck or related or correlated to Trump's odds of winning. Because I think there's a lot of people who say Trump is going to be better for Bitcoin. I'm going to buy if I think that he's going to win. I do believe that if Harris wins, Bitcoin would sell off for a day or two, kind of, oh, she won. and it'll go right back. And so again, I go back to kind of this idea of like under either administration, there may be some short-term volatility, but I think Bitcoin's going to do what Bitcoin does regardless. And you can see this because Bitcoin went up under Republicans and it went up under Democrats, right? It was created during Obama's tenure and it ended up going through multiple presidents and it's continued to do its thing. And so as I see Bitcoin's price go up, I always say to myself, everyone is distracted by politics because that is the easiest narrative. But at the same time that Bitcoin has been going up hand in hand with Trump's odds, guess what else they're doing? They're printing a lot of money. The national debt has seen almost $500 billion in the month of October added. It's a $35.8 trillion national debt. This is an explosion of debt being added. And so is it trading up because of Trump's odds or is it trading up because of the national debt? Regardless of what your answer is, the long-term structural trend is Bitcoin goes up. Very volatile, it'll draw down, it'll do all these things, but there's this Fidelity study that the people who died or lost their password had the best performance because they didn't touch it, right? The guy who bought the brownstones in Brooklyn, right? He bought it, he can't sell it really quick, right? So he can't wake up one day and be like, oh my God, sell. There's a process, it's hard, it's illiquid, all that kind of stuff. And so I do think people who just have a very long-term horizon, they're the ones who have the advantage. And even though it has all this volatility, imagine if I came to you in November of 2022 and said, oh my God, Bitcoin's at 17K, right? And you're like, oh, sell. And then I come back to you now, I'm like, oh my God, Bitcoin's at 70,000, right? And then I come back to you tomorrow, I'm like, it's at 65, right? You go crazy. So just having a long-term view, I think is kind of the thing that mitigates all the noise.
Bitcoin is easy to describe, and obviously people know that I talk about it a lot. But if you replace the word Bitcoin with house, the same thing is true. Why are older people so wealthy? Because 42% of Americans don't have a mortgage on their home. Highest in history. 42% of homeowners in America do not have a mortgage on their home. Why? Because such a large number of people bought homes 30 years ago and they've paid off their mortgage. They had one, they just had time. And so the bulk of their net worth is in their home. The home is a hard asset. Dollars got devalued. Somebody needs more of the less valuable dollars to buy that same home that the person bought 30 years ago. So at the same time that over 30 years, the dollar lost 50% of its value, the home is still a home. And so somebody needs more dollars. They got richer. A home, same is true for Bitcoin. Same is true for gold, but also same is true for the stock market, right? The stock market has the same thing. If you bought a share of a stock and the dollar gets devalued, somebody needs more dollars in the future to buy that share. So it's not a Bitcoin story. Again, it goes back to there's a gap of education, and the wealth inequality gap is actually an education gap. And so if people just know, do not save 100% of your wealth in dollars. You have to get out of dollars and you have to get into investable assets. Inflation punishes savers and it rewards investors. You don't have to take a lot of risk. You can just simply go dollar cost average into the S&P 500, the 500 largest companies in the US stock market. We're not talking about cryptocurrency. We're not talking about some crazy AI thing, anything. The single test of financial intelligence in the modern society is, did you save or did you invest? If you saved, you lost. If you invested, you probably ended up better. And so it's just financial education.
One of the most compelling parts of Pompliano's argument is his emphasis on a long-term perspective. He highlights studies showing that investors who held Bitcoin without interference outperformed those who frequently traded. This principle applies across asset classes, including real estate and stocks. Patience and a focus on the long-term potential of Bitcoin allow investors to weather its volatility and reap the rewards of its growth. Pompliano's advice is clear. Avoid getting caught up in daily price movements and market noise. Instead, focus on Bitcoin's role as a hard asset in a world of declining fiat currencies. This mindset not only mitigates stress, but also aligns with the strategies of successful investors who prioritize value preservation over short-term gains.
Please like and subscribe my channel.